Our ambition is to be $15 billion by fiscal 2020 at an operating margin of 23%, which is almost doubling our revenues. The core leadership team that I announced within 2 days of my announcement has settled very well, and together as a team, we have been doing a tremendous amount of detailing in terms of our strategy, both at a corporate level as well as for individual business units and accounts. We have broken down our overall strategy in certain key themes which we will drive to meet our ambition, and I will share those themes with you. Each of these themes have detailed measurable performance markers, and I will update you on our progress on these themes on a periodic basis. There are 6 broad themes on which we anchor our efforts to realize our ambition. The first theme is digital. Our vision of digital business across advisory, design, and technology is securing the mindshare of our customers, both existing and new. We believe consulting capabilities in business domain and IT strategy is key to helping customers transform themselves into digital. With this view, we have realigned our consulting business into digital to further boost the capability of our existing digital advisory business. Our acquisition of Designit that we did in August caters well to the design aspect of digital. The integration of Designit in terms of harmonizing the teams, cultures, and capabilities and creating differentiated positioning in the market is being accepted very well by our customers. Our clients are beginning to see the benefit of design and engineering working together, which is key for digital transformation. The joint go-to-market is securing exciting synergy deals. We have won 7 joint deals in the current quarter itself. For example, the design capability combined with technology skills helped us win a large digital engagement for a global bank. We have launched a focused training program to train 20,000 employees in the current financial year. We have already trained about 10,000 employees in various digital skills and engineering aspects of digital in the last financial year. We have opened digital pods in London, in New York, and in various other cities across the globe, where customers can come and ideate along with us on their digital strategies, and we can execute pilots and proof of concepts in digital. We are also driving significant sales transformation, a program called One Voice that enables our front-end sales team to be able to effectively sell digital to all our key clients. The second theme is around client mining. Enterprises are looking for the right partner in helping them with business outcomes. We, as I had shared earlier, have set up a dedicated integrated services unit with a mandate to integrate technology solutions across multiple service lines. Now, in the new structure, we have created both the integrated services unit and the integrated solution unit, which now both have individual focus on bringing services and solutions to our customers. The IISG has developed a cloud-based insight as a service platform with 5 industry applications: reputation management, customer attrition management for the insurance industry, market basket analysis for healthcare industry, fraud, waste, and abuse for the healthcare industry, the next best offer for retail banking, and so on and so forth. These solutions are industry specific, which can be taken to the market to both our existing and new customers, but essentially help mine with getting new offerings to our existing customers. These platforms combine domain knowledge application services, infrastructure services, and the business process services. Using the platforms, two predictive analytics use cases have been developed. Student retention analytics for a university and congestive heart failure analytics for a medical institution. We have launched a program called Adroit that is designed for delivery managers, and this year we plan to cover about 900 delivery leadership across all of our key accounts, which enables them to deliver in the next gen delivery model and to be able to gain expertise on delivery led sales, which is key to account mining. We should see this translate into better momentum in our top 100 customers, moving revenue bands in our $100 million and $50 million clients. The third theme is around geography focus. We are driving higher localization in each one of these markets. In continental Europe, the new leadership team that we have installed is up and running. We also acquired Celent, and this acquisition is starting to deliver synergy deals in the German market for us, apart from getting about 900 local German employees. We are setting up a delivery center in Mountain View, California for digital and engineering skills, and are in the process of identifying 2 more cities within the US to localize in US to be able to deliver in agile methodology to our customers locally. We are investing including Latin America, Canada, and Africa, where our sales teams are now in place and delivery structures are organized. We expect that the percentage of locals within our workforce across geographies will continue to expand, delivering a higher level of diversification of our workforce and globalization of the organization. The fourth theme is nonlinearity. We have created a dedicated unit called MIT, led by Prasanna, who headed infrastructure for us, to drive nonlinearity through investments in intellectual property in the form of products, like the products we have, including the mortgage origination system called Gallagher, analytics platforms, and the newly acquired platforms of Vitios and HPS. The platforms like Wipro Homes is part of this, and frameworks and solutions which are being developed. Homes continues to receive strong adoption. Homes, which is our artificial intelligence platform, with 18 engagements across diverse industry segments. Of these, in Q4, 6 new pilots with our customers were kicked off. One of the new engagement is an exciting new capability to read engineering drawings and extract product information to convert it to metadata that can be used for downstream processes like digital printing. We are piloting this with a global leader in parts manufacturing. We expect to see 4 engagements which have crossed pilot stage in homes into production. Another example of the platform is the managed file transfer platform, which is hosted on the Amazon cloud. The MFT platform has transformed B2B enterprise file transfers for global customers, including Fortune 500 customers. During Q4, as part of our nonlinearity initiative, we have filed 24 new patents on homes alone and initiated 2 new research programs in collaboration with leading universities. Overall, during the financial year, we filed 514 patents, which is an all-time high, and we now own over 1,100 patents in 9 different jurisdictions globally. We expect to drive a larger proportion of our IP revenues as an outcome of the nonlinear theme. The 5th theme is hyperautomation. Hyperautomation is a focused initiative to drive not only delivery productivity, but also a new way of how work is done in our industry. Leveraging cognitive and robotic process automation and drastically changing traditional IT delivery model. Last year, we focused on doing POCs with clients, and we have completed 42 POCs across our client base. This year, we plan to scale up the rollout across various project types, including IT infrastructure engagements and application and managed 4,500 FTEs through automation in this financial year. The sixth theme is building and leveraging the partner ecosystem. We believe that the various partners are a key part of our strategy, and they are a key enabler to building capability and scale in digital as well as all of our service offerings. The external partner ecosystems includes startups, alliances, academia, and the strategic partnerships with various hardware and software providers that we have. We have an active, consistent M&A strategy targeted towards fulfilling capability gaps and market access gaps that we believe we have in terms of executing our strategy. We have announced 4 acquisitions this year, and we are undergoing integration of these acquisitions, and we are seeing good market traction across all the 4 acquisitions that we've done. One of the strategic deals that we signed this quarter is a synergy deal from one of these 4 acquisitions. We launched Wipro Ventures last year, and it has seen strong traction. We have made 6 investments with a spend of $20 million in FY16 in startups. These are in the areas of big data analytics, artificial intelligence, Internet of Things, and cyber security related innovative technologies that will be reshaping the future of enterprises. We will continue to enhance our 360 alliances with key technology companies from a perspective of strategic alliance partnerships, joint go-to-market partnerships, and we will include growth alliance partners and niche alliance partners. Having shared the ambition, strategy, and the 6 key themes, let me now speak about the quarter and the year ending March 2016. In terms of financial numbers, our sequential growth was 2.7% in constant currency. On a full year basis, we grew 7.6% in constant currency. From a business perspective, our consumer and healthcare and life sciences business unit did well with a full year growth of 15.7% and 11.6% on constant currency basis. From a geography perspective, India and Middle East business grew well with 20.7% full year growth in constant currency. The traction in the US, which is a key market for us, has been quite good. From a service line point of view, the product engineering services continues to show consistent performance with a full year growth of 14.7% on the back of our investments in Internet of Things, a digital technology. Global infrastructure services continue to see growth and large deal wins, and it grew by 8.2% for a full year. We expect the momentum to continue in both GIS and PES service lines. Overall, we find the demand environment to be stable. While overall increase to spends with the clients are minimum, there is a reallocation of spend from the run side of the business to the change side of the business. And we are seeing great velocity. In this transition, Wipro has been successful in transferring client relationships from run side to change. And with our integrated services focus, we are able to proactively help our clients to make this transition happen into digital. In Q4, we saw good deal flow and a good set of deal closures. We won 4 strategic new deals in Q4. On the change side, for a leading global brand, it's a media company, we have brought together digital innovation and design-led solution from across Wipro to support the transformation program. This program will drive innovation for the customer, enable revenue growth for the enterprise through digital platforms, improve its risk profile through enhanced cybersecurity, and improve service availability to the company's end customers. On the run side, we are working with a leading US manufacturing company where we have successfully moved the customer's entire BizTalk infrastructure from their data center to Wipro's hybrid cloud offering. Wipro has helped optimize, consolidate, standardize, and create reusable business services across the enterprise, which has reduced around 30% of the run cost and enabled around 20 to 30% reusability. And this is delivered in a as-a-service consumption model. To conclude, we are confident that we will be able to execute on the themes, and this positions us very well with our clients, and this strategy is resonating well with the clients. We have a settled and very receptive organization, motivated set of employees, and a very excited leadership team. I will now request Jatin to speak about the financials in more detail. Thank you.
Hi, good evening. Good to see you all back. Always great to talk to all of you. Let me now walk you through some key highlights of our financials for the quarter and the year ended March 31st, 2016. Our revenues for the year were rupees 51,244, and this is the year in which we cross the benchmark of 50,000 crore. So for the people like us who have been around for a long time, it was certainly a good milestone to achieve. Our net income for the year was 8,892 crores, a growth of 3%. Our IT services revenue grew 11% on a year-on-year basis, and EBIT grew 2% year-on-year basis. We had intimated at stock exchanges last week that board will consider a proposal of share buyback, and I'm glad to inform you that board has approved a buyback proposal for the purchase by the company of up to 4 crore equity shares at a price of rupees 625 per equity share, aggregating to something like 2,500 crores as a maximum buyback value. This will of course go through the normal regulatory process and the procedure that is followed as per the SEBI guidelines for buyback of shares. The payout for the year, including interim, final, and approved buyback, is approximately 48% of the profits of fiscal 15-16. Now let me move to the quarter performance. We had a growth of 12% in revenues at 13,632 rupees crores. And our gross cash at the end of the quarter was 30,143 crores, or approximately 4.55 billion. And our net cash, we have roughly $1.9 billion of debt on the balance sheet. So the net cash on the books is something like 2.7 billion. So we remain in a good position from a capital structure and funding and cash availability standpoint for us to make investments which may be of strategic priority in line with what we have made in past. Let me now talk about the business units that did well, the geographies and service lines that did well last year. But before that, let me talk about some of the other key highlights of the quarter. In this quarter, we had completed the acquisition of health plan services, the acquisition which we announced and concluded during quarter 4. It's a great opportunity for us to participate in healthcare industry growth for IT services, or more particularly for business process as a service opportunity. And we are quite excited by the early success that we have seen in the acquisition. This was a quarter in which we had our voluntary attrition on a quarterly annualized basis dropped from 16.3% in Q3 to 14.9% in Q4. And this has been among our lowest voluntary attrition on a quarterly annualized basis in many quarters. We also added a headcount of about 2,248. This includes the people that came with our investments on M&A front. And at the end of the year and quarter, we were at 1,72,912 employees. Our healthcare, life sciences and services business continues to do well. On quarter 4, it grew 20.1% on a constant currency year-on-year basis. Retail, consumer goods and transportation grew 15.2% on a constant currency basis. And we also had a great growth in manufacturing, ahead of company growth rate. Geography, we continue to see good momentum from Americas. We continue to see a great momentum from India and Middle East business. And we have further strengthened our position with our Silent acquisition that we concluded in the beginning of this quarter by our investment in local market in Germany. And we are confident some of the investments in Europe will give us greater momentum as we start the new year. From a service line standpoint, we had a growth in business process services of approximately 20% on year-on-year basis. Product engineering services grew 11.5%, and on a full year basis grew upwards of 14%. So product engineering is as many of you are aware, is a core strength of Wipro and has been doing quite well over the course of last 4 quarters. And global infrastructure services, this is our flagship service line, continues to do well. Q4, it grew 9.9% on a YOY basis. Our guidance for quarter 1 of fiscal 16-17, we expect the revenues from our IT services business to be in range of $1901 million to $1939 million in the currencies which are mentioned here, the constant currency of quarter 4 that we normally give. These have been shared on the slide. And this translates to something like 1 to 3% sequential growth for quarter 1. We have some further details which are given as supplementing data in your handouts, and we'll be very happy to take any question you may have on financials. Thank you.
Hi, Abid. Chandra here from ET Now. Hi, just want to touch upon the current quarter's performance. I mean, if you look at Q4, even if you look at the guidance for Q1, it's slightly below what the street was estimating. I mean, Q4, even with acquisitions, came below what people were estimating. So, can you take us through any pressure points or pain points as a result of which it was below expectations? And also talking about the 2020 target that you laid out, the $15 billion in revenue. Would you be able to give us a breakup on how much is going to come from existing business, new business, and also acquisitions, and also the 23% margin? Will it be driven by the gains that you make from automation?
So Chandra, on the quarter 4, we've delivered within our guidance range, and we continue to see softness in the energy and utility vertical, so we've not come out of that. But looking at the oil prices, we do think that once there is certainty over there, we've acquired a significant market share in that vertical, and we continue to feel good about that vertical. We also had some softness in certain clients in the banking and financial services space, especially in Europe, which has provided certain headwinds in the Q4 performance. Talking about the ambition, we've clearly articulated on a year-on-year basis internally all of the levers that we think would drive revenue growth and margin growth. At this point in time, we are not sharing all of the breakup of this, but you should look the ambition from a directional perspective in terms of how we aspire to grow, both in revenue terms and margin terms. And the themes that I've outlined, the 6 themes, will essentially be the drivers for growth across the organization.
Right.
With the retail and...
You mentioned that, you met 70 of the top 100 clients. So what is your own assessment of, which engine Wipro's been lacking in? Because it's not like, there wasn't a forward-looking strategy, a digital strategy, a hunting and farming strategy. It was all in place. But where exactly do you think, the shortfall happened, which you will be able to address in your term? If you can give us some color on that.
So first of all, across customers, there is a very high level of trust and respect for the Wipro brand, and the relationships are very deep. They respect Wipro for the technology skills that Wipro brings. I think some of the areas where we need to do better in terms of how we take proactive propositions in a consultative sales mode with the customers, understanding what their current landscape is, their strategy is. And that is where we've embarked on a consultative sales transformation within the organization. Also, we've aligned our MIT organization, which brings in non-linear propositions to the customer, because the consumption models for the customers are changing in terms of as a service model, where CapEx is getting converted to OpEx. So for us to be able to have the right capabilities, which we are investing in, and taking them proactive to our clients, are the key changes that we are bringing in place.
One final question, really will.
Lot has been written, but want to hear from the horse's mouth why the buyback, and also the quantum that has been now given for the buyback, and also the price range that has been mentioned doesn't seem to be very attractive, is what the initial comments that we are getting. So would you look at a change in the price if the offer is not very lucrative and you're not getting that many shares, but want to hear from you on the buyback?
So sure, I think I spoke about the cash that we have on our balance sheet, and we have always looked at opportunities where we could return the cash to the shareholders, and it goes towards our overall objective of, striving towards more value for our shareholders. There is nothing specific to the timing. I think this is right timing, as good as any other time. Board feels comfortable at 625, which is our price, and it is, if you look at the 60-day average price before our intimation to stock exchanges last week, that will translate into maybe about 15-16% premium on that number. And so I think it's a good attractive price for anybody who holds Wipro share to take advantage of this buyback process.
So BFSI and retail have been pretty slow in this quarter. Are we grappling with specific issues, or are these industry-wide trends that you're seeing?
So I think consumer overall has done very well for the year, and we are seeing very good traction. We've had certain both strategic deal wins and a large number of deal wins and mining opportunities. So I don't see any challenge over there. In banking, I think there's certain softness that we specifically saw in some of the Europe piece of our banking business. But again, I think, it is just a matter of time that we look at opportunities over there. We've got a very strong Europe team focused on the banking segment, and I don't see an issue over the longer term.
Many of your peers have talked about a secular downward in pricing. There's pressure on pricing, and we've been seeing that for several quarters now. What do you make of this? Are there more efficiencies in the system that Indian IT companies can generate? Or are clients clearly thinking that IT vendors are making much more money than what they should be?
So I think it is not about margins. The ability to give a more efficient price is more about the business model. If we are able to take more managed services, which Wipro has one of the highest percentages of fixed price engagements, and we are able to then internally drive automation, like the bots that we have, the partnerships that we have in robotic automation, as well as the Wipro Homes platform, which is a differentiator. We can deliver to a different price point to a customer. The need the customer has for a better efficiency in the run businesses because the total technology spend is not increasing, whereas there is a large requirement of spend in the digital space. So I think we are very well positioned both to address the run part, as I mentioned, and then help the customers reinvest in digital, where again we've got differentiated capabilities, including design capabilities within the market.
Finally, what's the rationale of merging the consulting business with the digital practice? If you can throw some light on that.
If you look at digital transformation that is happening with customers, unlike GIS and some of the other businesses, there are no large digital RFPs that customers issue. The way digital happens is customers need to think and strategize about their digital strategy. And that is where you need upfront consulting and architecture services. Then we need to remap customer journeys, which is essentially a business process needs to be laterally thought completely with design in mind, a better user experience in mind. And that is where our design capability comes into picture. And then we need to execute on the technology delivery, where the agile and DevOps and cloud enablement and cyber security comes in, where again, we've got leadership position. So if you look at the whole way in which digital is done, it starts with consulting and advisory services. And that is why we have augmented and scaled up our advisory services by merging the units.
Sure. Varun? Hi, Abid. 3 questions. Firstly, the question to Jatin. Jatin, what was the organic revenue growth, inorganic revenue growth, if you can just break it down in the 4th quarter and for the full year, please?
Sure. So, Varun, we have not broken down the organic versus inorganic growth, given the fact that we had 3 such events in the past in quarter 4, and they were all variable. We have given our guidance was a total guidance. We have delivered against that at a total number, and that's the philosophy with which we look at our businesses. We guide our internal targets. So I think it's unfair on the management which works with us to be looked at 2 separately. They don't look at it 2 separately.
So if I can just ask, like in the last 1 year, fiscal year, how much would the acquisitions brought to the business? What revenue?
You're sort of asking whether it's a day outside or whether you're saying there is a sunlight outside. So it's one and the same. So I'm not able to help you.
Okay. Abid, the question here is that for the full year, how much would M&As bring, if I could ask, and how big is digital? And what is the target for digital? Because digital is a very fuzzy word we don't understand. Whether you classify cloud as digital or what is digital when Wipro says?
So again, we are not breaking out our revenues, whether M&A or in digital. So I will not be able to share the specific numbers. But let me explain to you the concept. See, the whole M&A strategy that we are executing on is not for revenues or buying volume. What we are doing is there are differentiated capabilities that we need in the market from a future perspective. And the examples that you will see in the 4 most recent deals that we have announced, you will be able to see how the strategy is playing out. In one case, it is for market access. We've got significant access in the German market in the manufacturing sector. The second one, if you look at it, is for getting differentiated capability very quickly, which would take otherwise too long. For example, we train our engineers, our computer scientists on design. You can expose them on design, but you can't make an engineer a creative designer. So we've acquired DesignIt, which brings us over 300 creative designers who are not at all by training like our engineers, but the synergy with the 160,000 engineers and the 300 designers to be able to go to our clients for the digital advisory and customer journey engineering services is tremendous. So that is the synergy effect over there. Again, it's a small, from revenue terms, it doesn't add too much to the revenue, but the synergy and the ability to be a digital partner for our customer is hugely enhanced. The couple of other acquisitions that I have announced is around bringing a full stack service, a business process as a service on a consumption-based pricing, which will be the future of how IT will be delivered, whether it is at an infrastructure layer, whether it is at an applications layer or a business process layer. So all of these acquisitions are to ensure that with speed, we are able to go to market to our customers with offerings that are relevant to our customers or get market access where it makes sense. Similarly, on digital, I believe that everything in the next 3 or 4 years that customers will consume will become digital. So, it doesn't make sense to pull our hair around what is digital and what is not digital. What is more important is that within the digital unit, we have housed the first 2 parts of the capability of digital, which is the think and advisory services to the customer and the design services. Eventually, as the execution starts, it could be digital execution, but it could be housed in different places. For example, cloud is best housed in the infrastructure space. Cloud migration of applications is best housed in the application service practice. Analytics, everything to do with big data, while we can call it digital, is best housed in our analytics practice where all of that capability sits. Security, cyber security is a big part as you move data into the cloud, is housed in our security practice, which is, again, we have leadership over there. So I wouldn't worry too much about, the organization structure and try to relate it to digital or non-digital. And hence, we look at digital as across our service lines and business units aspects which could be classified as digital. And for each one of them, we have clear revenue targets and sales force focused on that.
Finally, which of these 6 themes will start or we can see the most immediate impact, say in 6 months or to 12 months? You've outlined your strategy under 6 broad buckets. Some of them would start resulting into good metrics to measure. So can you just share which are some of the themes which will play out in the next 12 months and some of them which are long term? Thank you.
See, each one of these themes will have early indicators will start playing out. So as I mentioned in my opening remarks, for each one of these themes, we have multiple output markers internally, but some of that in terms of especially around deal wins and client, we will come back and share with you on a quarterly basis. I think all the 6 themes are being executed in parallel, and there is a level of synergy across those themes as well. For example, with our investment in the local markets, our ability to deliver digital goes higher. So digital is one theme, investment in local markets is another theme. Both synergistically help us to do agile projects in a digital pod near the customer, along with the customer.
Chandra?
Yeah.
Hello, sir.
No, 1 second.
Hello.
Just a couple of follow-up questions, Abid. When do you see Wipro really coming back to industry-leading or industry-level growth? FY17, FY18, when do you see that happening? And secondly, a lot of analysts say that a lot of the consulting spend or the digital spend is being chipped away by the likes of, McKinsey and Accenture because they have a very strong consulting business. So again, how will you really beef up consulting going forward? Will you look at making more CXO level hires? And Saurabh, both, Infi and TCS have announced the wage hikes. If you can give us an update from Wipro.
Let me let Saurabh answer the wage hike update first, and then I will.
Sure.
Chandra, our date of hikes is 1st June. So it's still time, but I can tell you that industry, based on, we'll close the date, we'll announce the exact
12
numbers.
or 8 to 12.
That you are deciding for us. Thanks for that. But we'll let you know closer the date. Right now, it's just that we are in the process of finalizing the things, budgets and all. Trying to convince Abid for more money. So then once I will get that, then I'll be able to do that.
So Chitra, I will attempt first question and then I'll request Abid to add. So fundamentally, right now the way you heard us, I think we are at the beginning of the curve and beginning of the journey, and we need to gather right momentum, which leads to sustainable revenue growth clearly, right? Now we have given you a view of where we want to be in 4 years. We clearly can't reach there if we stay here. So there has to be acceleration between now and then. Our focus right now is to keep our heads down and execute on the 6 things that we have spoken about. And therefore, we are not calling out a particular quarter, even if we could, that you will suddenly see a change in rhythm. But I'll request Abid to add.
So again, as I said, the more important thing from an external perspective is as we come back every quarter and report back on the traction on this, and then you will be able to make a judgment on yourself by yourself in terms of how we are moving towards industry-leading growth. The short answer is we will do it across all of these 6 themes, across all of the activities that we do, whether the run side or change side, across our geographies and across our business units, across all of our accounts.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.